Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the expanding flat scenario where we have three waves in an ABC, after which we then expect continuation to the upside in the wave 5. An expanding flat is also a common structure in a bigger wave 4, so we always have to keep this one in mind, where the most common target for a wave B is between the 1.236 and the 1.38 fib taken from the high to the low of A, which gives us a target between 38.7k and 39.2k. This is also in confluence with the target boxes, the resistance boxes that we have above price here. The golden one sitting between 38.5 and 39k, and the blue one between 39.3 and 39.7k. After this wave B, we then want to see an impulse to the downside in 5 waves, 1, 2, 3, 4, 5, where the most common target for wave C is between the two 1.618s, giving us a target between 33.7k and 32.1k. And what is nice about this scenario is that, of course, some people will count this as a wave 5 high over here, and then when you get an impulse to the downside, people will either label it a wave A or a wave 1. But instead, it baits people out and price moves towards the upside, which is very attractive indeed. And that's also why an expanding flat wave B is often called a fake high. So this is definitely something I keep an eye on, where the retracement could be a potential buy opportunity for then a move back towards the upside. It also means we're finally going to take the double top over here, which is sitting at 38k. If we look at the WXY scenario over here, then in wave Y we are also looking for a flat structure. We have a W in a zigzag, X zigzag, and then we're looking for a flat in an ABC. Has to be said that this wave X is very short compared to wave W. This wave X is shorter than the 382 fib time, which you take from the beginning to the end of wave W. And if you then toggle on the 382, then you can see that this wave X is shorter than the 382, which is quite uncommon, right? So that lowers the probabilities a little bit of this scenario. But in this scenario, you're also looking for a WXY with a flat in wave Y. Main reason for the flat in wave Y is that in a sideways double combo, in a sideways WXY, wave W and wave Y are not allowed to have the same structure. So if wave W is a zigzag in an ABC, wave Y cannot be a zigzag, which then only for a wave Y leaves a triangle or a flat. Now clearly we are not having a triangle over here at the moment, right? We definitely need more price action for this. So currently that's the reason why I have a flat on my chart. A triangle is not impossible. It's at the moment just lower probabilities, simply because we don't have enough price action to validate a potential triangle in this scenario. Now, if we talk about triangles, then this one, of course, remains interesting, where we do have a bigger triangle where D is in and we are looking for an E to the downside. A, B, C, D, eventually E, before then continuation to the upside. Couple of rules that are important though. 4 out of the 5 waves have to be simple zigzag structures, either a 535 up or a 535 down. Volume has to go to the downside as price is evolving, which at the moment is the case over here, right? We do have the peaks, of course, but generally we are looking for a little bit of a downtrend in volume. And if one of the waves is complex, it's usually C, D, or E, as 4 out of the 5 waves have to be a zigzag. But if one is not, it's usually C and D, and sometimes E, where C and D can be a zigzag family pattern, meaning a double or a triple zigzag, and wave E can be a triangle by itself. Now the most common target for triangles for each of the waves is between the golden pocket and the 786. You can see that wave D over here went to the 886, which is less common for a wave D in a triangle, but the official invalidation is taking the high of this wave B over here. What is common after an 886 hit is for price to also move to the golden pocket, which it hasn't done yet, right? The 886 sitting at 37.7k. Golden pocket starts here, 37.1k, 37k. That is common, and if this holds, then we could look for potentially new highs, which then of course invalidates this triangle. But it is common after an 886 touch to see the golden pocket being hit as well. So that is definitely an area of interest and an area I will keep my eye out for, right? Now also for this wave D, if we're looking at an ABC, then this high would have been a little bit nicer for an ABC, honestly. However, we did hit the 1-to-1 here. So if you take a trend-based fib extension and you take it from the low of C to this high here, for then a potential diagonal to the upside to this low, toggle on the zigzag targets, then you can see the 1-to-1 has been hit over here with the high of wave D. Now that is nice, right? The 1-to-1 being hit, that is nice. The problem for me is this being a wave C to the upside, because if this is a wave C, that means that this range over here somehow has to be a wave 4 of some sort. But if this is the low of B and this is your C, this is a nice move to the upside, right? It's in proportion as well with the sub-degree waves. But this over here looks very 3-wavy and it doesn't look 5-wavy, which is for me a problem, right? So preferably this would have been the high and then you have a move down. But now that this is the high, yes, you hit the 1-to-1, a target for a wave C, but the sub-degree count of this wave C at the moment is not so nice, right? So that is something we have to keep in mind, lowering the probabilities as well for this scenario. But if we look at the target area for a wave E with the fibs taken from the low of C to the current high that we have over here, then we get a target area between 36.4k and 36k. And if we then also open my support areas, then you can see it's in confluence with the blue box here, 36.4, 36.6, and then also here 36.1, 36.2k. It also has to get through this small support area here, which is sitting between 37.1 and 37.2k. If we then zoom in to the micro time frame over here, what we also want to see for a triangle or any bigger move to the downside is a 5-wave impulsive structure. Now this is the high over here. Price move down, price move back up and hit the 886. And the moment the 886 is hit, we have to think one thing. Probabilities are higher. This high over here is a wave B or a wave X, which means any move that we get to the downside afterwards has a higher probability of being a wave C or a wave Y, which therefore again increases probabilities to move back towards the upside instead of seeing much lower targets to come. Now, based on the corrective nature here, if this one fills, yes, I'd be looking for this target box over here, right? But generally, if you're looking for a bigger move down, you want to see impulsive structures. And at the moment, all of this here looks very corrective. And we got the 886 retracement as well, which of course is not what you want to see, because an 886 is a rare target for a wave 2, and then a 1, 2, and then potentially a bigger 3 to the downside, lowering the probabilities. We have an impulse to the downside here, increasing probabilities. Everything is corrective, and after a bit of a move down, you're going to see price moving to the upside, taking the double top that we have over here, as well as then still looking for that double top at 38k. Now, price down here did create a double bottom just now. It actually took the liquidity of this low and this low on my chart. I can actually show this as well with a horizontal line. You can see it got wicked. So these two lows over here got wicked, but the lowest low all the way here on the left did not get wicked. So we now have again low number 1, low number 2, a little bit of a double bottom. If we look at the CVD divergences here, then after price wicked the low, you can also see we got some bearish CVD with the yellow, right? So we have over here lower high on price, but also here a higher high on yellow, also more locally. At the same time though, quite interesting, on the 3-minute, we have higher lows and lower lows on yellow. So there's a little bit of a mix going on the very low time frames here, right? But we have a little bit of support, which is the daily naked point of control of yesterday, which is always an important level, as well as the golden pocket taken from the low to the high. So that is definitely interesting support in this target box. Again, 37.1, 37.2k. And if this holds, I'd be looking for a move back towards the upside. Now, if you look at the CVD divergences, we have some bearish CVD divergences here that already played out as price was moving to the downside. Bearish CVDs were building. Of course, once more, we have the yellow line also showing bearish CVD, also a little bit bullish. So it's a bit of a mix, right? But we had a bit of a buildup of bearish CVD as price was moving to the downside. We also had a bullish CVD between this low and the higher low, which I can show you here on the 15-minute. I zoom out and you can see on yellow, we have a higher low here on price, but we had a lower low with this yellow line, right? We had a lower low on yellow as well. So we had a bullish CVD divergence, which not yet played out, because the target of the bullish CVD is this high over here. Now again, meaning the double top, and then the probabilities are high. You're going to take the double top at 38K as well. If we zoom out, look at this range, then currently we are at the support resistance area. Trade the range until it breaks. Of course, we're already in this range for a very long time now, right? It's just general knowledge in the industry, I suppose, where we've been going sideways for quite a while now. And we also had this support resistance, both of the levels on the chart, for quite a while now. You can see the value area high is in the support resistance area above, the value area low down here as well. And we're currently ranging around the support resistance area. So yeah, we're currently still inside the range, and of course looking for a breakout hopefully this week. And if we then look at the news, we do have news, so maybe that might accelerate something, right? 8 p.m. Central European time, we have high impact news, which you can see by the red flag over here. So maybe it increases the volatility. Make sure you trade safe at 8 p.m. Central European time. And if we then look at the probabilities of the different scenarios, then if we look at the low time frame scenarios, right, where we have the flat over here, for example, in the ABC for a wave 4 as well as the WXY, currently probabilities are higher to take the double top before any significant move that you get towards the downside. And on the micro, with that 886 touch that we have here as well, probabilities are higher to take the double top that we have on the micro as well, because the 886 is rare for 2, common for B or X, increasing probabilities for C or Y, and then a return to the upside. It would be nice to hit the support box that we have down here and then observe the reaction at support for then potentially a move to the upside. Also take the liquidity here of the double bottom that price just created. But we wait and see and observe the chart. Next update 1 p.m. Central European time. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.